Hello everyone! Welcome to another video lesson discussion in General Mathematics. For today's discussion, we will have annuities. And here are the objectives. And here are the questions that you need to answer at the end of the discussion. Let us define annuity. Annuity is another common business practice of payments. Literally, annuity means payments made annually. But it can also refer to as payments made at different segmental payment period, or a series of equal payments over a period of time. Example of annuities are the following. House rental or condo rental. For example, you are paying 5,000 monthly sa upa sa bahay or 10,000 monthly sa condo rental for a period of time. For example, you have a condo rental contract for 2 years. Labor wages is also another type of annuities. Payments or yung sahod ng trabahador can be received weekly, every 2 weeks, or monthly. Installment payments, for example, you bought an appliances and you want to pay it for 3 months, or for 6 months, or for a year through your credit card. So the payment for that will be divided equally for how long you're going to pay it. For example, for 6 months, so it will be divided into 6 equal parts. We also have life or accident insurance where you can avail it through life insurance company like ProLife UK, what else, Sun Life, and others. No? And then you have health insurance premiums through Caritas. You may avail it or purchase it by paying monthly, quarterly, or annually. Another example are loans. Different types of loans. You have salary loans, cash loans, calamity loan, car loan, housing loan, or credit card loans. So, payment for this type of loans can be deducted through your salary, or you can pay it through bank account or through banks over the counter. You can also have monthly savings. For example, may alikansya kayo sa bahay at naguhulog kayo doon araw-araw, 10 pesos, or weekly, or monthly. Or a regular deposits in your bank account. For example, 1,000 a month. So those are types of annuities. Annuities can also refer to as a series of equal withdrawals. So this time you are receiving payments. Payments of what? Example, retirement benefits. So kapag when you reach the age of 60, nag-retire na kayo sa trabaho nyo, you can have the pension. So you can have it lump sum for 1 year, and then the rest you can receive it monthly or quarterly depending on your agreement. You can also receive payments through interest payment. For example, may pinautang ka ng malaking halaga at binabayaran niya ang tubo monthly on a regular basis. If you are a shareholders or stockholders in a company, you may receive cash dividends, stocks dividends, or bond dividends annually. So these are all examples of annuities. So it's either you are paying equal amount of money or receiving an equal amount of money. Okay, let us define formally annuity. Annuity is a series of equal payments made at equal or regular interval. Examples, monthly house rental, so monthly, and then you have monthly home mortgage payment or car loan, so the regular interval is monthly, and then life insurance policy with quarterly premiums, so the regular interval or the time interval is quarterly, and pension payments, it could be monthly or yearly, and a shareholder receiving cash or stock dividends annually. Annually is the regular interval or the time interval. Other concepts that you need to understand related to annuities are the following. Each payment in an annuity is called the periodic payment. For example, 5,000 pesos. The time between the successive payment dates of an annuity is called payment interval. Example, 5,000 monthly. Monthly is the payment interval. and 5,000 is the periodic payment. The interval between the beginning of the first payment and the end of the last payment period is called the term of the annuity. Example, 5,000 monthly for 2 years. So 2 years is the term of the annuity. Annuity takes different forms. The mode of payments is basically the basis for the forms or the type of annuities. There are two types of annuity. You have the annuity certain and the annuity uncertain or the contingent annuity. Annuity certain, the payment begins and ends on a definite or fixed date. So the first payment, the date of the first and the last payment is fixed and there is a certain duration. So for example, 3 years. Example of annuity certain are the different types of loans. While annuity uncertain is payable for indefinite duration or paid according to certain events. It is subject to the condition or terms that must be met before the beneficiary will receive payments. Example of this is pension, life insurance, or accident insurance. So, indefinite ang duration because you do not know kung kailan siya mangyayari, kung kailan mamamatay, or kailan ma-aksidente, wag naman sana. And before you can be paid for your insurance or the beneficiary will receive the money, you have to submit all the requirements first. Okay? So, yung sa accident insurance, ganun din, kailangan isubmit mo na lahat ng requirements. For the pension, so, there is also the requirements that needed to be submitted before you receive or starting receiving your pension. So, those are examples of annuity uncertain or contingent annuity. There are two types of annuity certain. You have the simple annuity and the general annuity. So we will discuss these two further as we go along with the topic. Under the simple annuity, we have the simple ordinary annuity, the simple annuity due, and the deferred annuity. And then under general annuity, we have the general ordinary annuity, the general annuity due, and the perpetuities. So these are the flow chart for the different forms of annuity. Let's move downward with the flow chart. Let's focus on the annuity certain. So we have here the two types, simple and general, and then under those two are the subtype of annuities. Okay, so earlier we defined annuity certain as annuity where the payments are fixed, the first and the last, and there is a definite duration. Now, the two types of annuity certain is simple annuity and general. For the simple annuity, the interest conversion or compounding period coincides with the payment interval or they are the same. Now, while for the general annuity, the interest conversion or compounding period do not coincide with the payment interval. Okay, let's have an example. Let's classify this one whether it is a simple or a general annuity. Let's have payments are made at the end of each month for a loan that charges 1.25% interest compounded semi-annually. So the payment interval here is each month or monthly and the conversion rate is compounded semi-annually. Since we know that semi-annually means every 6 months and this one is monthly, so they are not the same. The interest conversion and the payment interval is not the same. So it is a general annuity. Another example, a deposit of 6,000 pesos was made at the end of every 3 months to an account that earns interest compounded quarterly. So here, the payment interval is every 3 months and the interest conversion is quarterly. And we know that quarterly, the value of that is 4. So 12 divided by 4 is equal to 3. So quarterly also mean every 3 months. So since the conversion period and the payment interval are the same, so it is a simple annuity. So I hope you see the difference between general and simple annuity. Okay, let's move downward. So we defined earlier simple annuity as an annuity having the same payment interval and conversion period. So under it, we have the annuity due, wherein payments are made at the beginning of each interest conversion period, or the periodic payment is made at the beginning of each payment interval. Other clues or terms that you might encounter could be payments made in advance, payments starting today, or due at the beginning. Now, ordinary annuity, here payments are made at the end of the interest conversion period, or periodic payment is made at the end of each payment period. Example of this is mortgage. Okay? If the period cycle is monthly or 1 month, you can receive it whether on the 28th, on the 30th, or on the 31st. And the last one we have deferred annuity. Here, payments is neither made at the beginning nor at the end of the interest conversion period, but on some later dates. So, also, example of this is the pension. Okay, let's have an example. Let us classify the situation here, whether it is an example of ordinary annuity or annuity due. Example, Imelda's monthly mortgage is 23,000 pesos at the end of each month. Since it is at the end, so therefore it is an ordinary annuity. Another one, we have the rent for the apartment is 4,500 pesos. And it is due at the beginning of each month. So you have here at the beginning, so this is an example of annuity due. Okay, I hope that is clear. Okay, let's move on to the other type of annuity certain. We have the general annuity. So we define this one as having the conversion period and the payment interval is not the same, or they do not coincide. So the first subtype of this is the general annuity due. So just like the simple annuity due, the payment here is made at the beginning of every payment interval. While for general ordinary annuity, same with the simple ordinary annuity, the payment is made at the end of every payment interval. While the third one, or the third type, which is perpetuities, so it is a series of periodic payments which are to run infinitely or forever. There is no maturity date. And example of these are stocks, bonds, real estates, and other special businesses. Okay, so for as long as you have stocks or bonds in a company, or you have real estate investments or businesses, so you are paying annuities continuously. So these are perpetuities. Okay, this ends our discussion for today. So I hope it is clear. Kindly visit the Google Classroom for your output and then wait for the part 2 of this discussion. Thank you.